as the previous one, which was after making the bull attempt where we broke. If you guys remember, February 2nd, right, was this high right here. We breached that by not a lot on the NQ, but we did. So technically, this was a new high compared to this pivot high. Okay, so you got a long trigger there, but it didn't. It just immediately stuffed lower high, and then has been lower high, lower low since. And so now you had a long bias trigger that failed, and now we've triggered the short trigger. So, I'm not really interested, and I actually talked about this last week. I don't want people, and again, not financial advice, but I don't want people initiating longer term long positions in this market. You're going to see a time, like if you guys go look at all the other bear markets, they have to bottom in the same way. The only way something can bottom is to first start making higher lows and higher highs, and then you should see a base form, some sort of sideways action, and then a healthy push out of that base. There's no rush. There's zero rush to get in here and be trying to find a bottom. We've talked about this. There was a lot of Twitter perma bears that called a top the whole way up for the last 13 years, and they all got laughed at, ran over, left in the dust. I don't know how any of them made money. But the same thing applies once we start this downtrend, is don't be that guy that's calling the bottom the whole way down. There's zero reason to do it. Path of least resistance is lower. Short pops, ride the trend, let the trend pay you. Does that mean there's no long day trades? Hell no. I take day trades long all the time, but you got to know your levels. It's best to wait for some extensions to the downside when you see that capitulation, and then you're going to have a few days of these bear market rallies where the bulls just rip your face off, and if you can be prepared for those, you can capitalize on the long side big time. But it's not for longer term positions. So you guys can see the levels I have marked. I've got the quarterly pivot up there, right, 13,000 psychological level. It's going to be close to Thursday's low a day as well, and Wednesday's closing price. So and Tuesday's closing price as well. So there's a lot of price history there. You can see it was the lows back in mid-March. So a spike back up in those levels. That's the first level of resistance I have. Next, I've got this 13,200 area. And then after that, the annual pivot with last month's pivot right in that 13.4 area. Yes, there's levels higher. Not sure we see them this week or not, but let's just in case, we'll throw another alert up here around last week's highs. And if you guys don't know how I set these, this is what I do. Okay, so there's another one. When I mark it with an R, that just means resistance. Mark it with an S, it's support. All right, that's and then of course the support is last week's lows, and then the next level I have for support is going to be based off of the range that was set. You see the highs, and then held as support. It's going to be this 12,300 area, 12,300 to 12,500. Okay, so it's a range. If we lose last week's lows, that's the next area where I would see possible support. Doesn't mean they'll show up or not, but keep an eye on it. Bitcoin got a little bit jammed up the other day, right? It was it wasn't just Bitcoin, but it was a lot of the cryptocurrencies were all selling off. It doesn't even look like that crazy of a sell-off in hindsight, right? It was pretty damn controlled. It was just 2 days up, 2 days down. We'll get a bit of a bounce day here. But again, we're right into this little trend line here. We're also right into, if you guys see the levels from right in here, you had a lot of lows